What's up, everyone? Welcome to my channel. My name is Mark. You're watching Trading with a Dummy. Today, we have another podcast with a special guest, another dividend investor, also YouTuber. Happened to meet him through Ryan Williams, which is another person I interviewed not too long ago. But I also like this individual's trading style. So why not bring him on here and let's talk about dividends. But first, let's get to know who this person is. So ladies and gentlemen, give a round of applause for Russ from Dapper Dividends. What's up, Russ? How you doing?
What's up, man? I'm good. I am here in Chicago in the Windy City, and I'm just, hey, it's a Saturday when we're recording this. I'm working on the channel. I'm working page for my ebook. So big things moving and shaking, trying to always improve what we're doing around here with this whole, content creation thing that we do.
Yes, it has been. It's been rough road, man. I don't know how long you've been doing this for. When'd you start? When'd you start your channel? Like 2020, 21?
20. Yep. Pretty
20,
much
okay.
right during when a lot of other people did in March, April 2020, right during the COVID pandemic kickoff.
Yes.
So
Yes.
I kicked off the channel.
Let me guess. You were bored at home and you were like, you know what? Let me start a YouTube channel.
Yeah, I guess I was looking. So we weren't hanging out with people anymore. I mean, we were spending most of our time in. I have my wife and kids, and I thought, you know what? Let me just do this thing and see what happens. I had no idea what I was doing. I thought I did, but I've just continually been learning and growing and improving, trying to get better all the time, man. Every day, trying to get 1% better.
Yeah, no, I love your channel. That's the reason why I wanted to bring you on, because Ryan recommended you, and I was like, oh, there's another guy that has a dividend channel. Let me go check him out. And I like yours a lot, especially because you do cover calls. We're going to get into that in a few minutes. But first and foremost, so you said you live in Chicago. Yep. Sorry. I'm kidding. I don't know. I mean, obviously you love Chicago, I'm guessing, right? Is it true that the crime rates are like ridiculous out there? Or is that just, the news inflating fear?
I don't really follow it. I mean, I guess as long as the crime isn't in my backyard and it's not happening to me, I don't know. I probably should pay attention to it more. But no, my wife and I go into the city a lot. We take public transportation, and sometimes it can get a little sketchy. We like taking the L. That's the big elevated train that you probably see when they show, stock footage of Chicago. And I don't know. It's fine. Yeah, I've lived here my whole life except for my time that I was in the Navy. And I came back, and hey, I almost stayed out in Southern California, though. I loved SoCal, San Diego. And, stayed
that
out
place
here,
is beautiful.
Man.
Yeah, that place.
Where
is
are you
beautiful.
at,
Let's go
by
back.
the way?
Oh, I'm in Orlando, man. I live in Orlando. We moved here 2018. Prior to that, we were in Destin, Florida, which is just basically Alabama. They call it Lower Alabama, but it's Florida. And before that, I was in Vegas, man, for 8 years. So that's where I met my wife. That's where my wife's family lives currently. That's where my oldest son lives at. So was out there in Vegas, before the big boom that everyone's moving over there now. It's very different from what I hear. And prior to that, Germany. So I am German.
Wow.
Yes,
really?
I'm German, believe it or not. Yeah. My mom's German. My dad was in the military, met her, and I grew up in Germany. So I wasn't born there, but I did grow up in Germany. So I consider myself more German than anything. I went through English is my second language, ESL. I was that kid in middle school once I transitioned from German school to the DoD school, and that was hard, man. It was not hard to like learn the language or anything. It was just embarrassing because everyone's like, "Wait, you're black and you're German? That's weird, and you don't speak English very well." I'm like, I don't. And you're sitting in class, it's like, Marcus, say cat, cot, no, cat, cot, no. Cat. So it was very, very interesting journey. But I'm here now.
I honestly can't tell that you're ESL, man. I mean, your English is very, very good and very unique story. I really do love that. We're planning on taking a trip in June. We're planning on going to the Czech Republic and then to Ireland. And we had thought about trying to hit Germany. We've wanted to see that area and maybe another trip. But I've never been over to Europe. I've been around the world, but I've never been to Europe.
Really? Wow. Yeah, man, dude, Europe is amazing. I'm actually contemplating about trying to move back next year. It's all up to my wife. She's down for it. But we're actually going back in December. We're going for Christmas. We're going to England, and then probably hop from England to Paris and Germany to visit my family out there, and then come back. So we'll see what happens. But Russ, man, tell me a little bit about yourself from the beginning. Like, where are you initially from? Do you have siblings? Tell me a little bit about yourself.
Yeah. So I'll try and give the abbreviated version because I don't want to spend the whole entire time we talk just telling you about that. But yeah, born and raised here in Chicago. Basically came from a broken home, meaning that my parents were really young when I was born. My mom was 19, my dad was 18, and he wasn't ready to be a dad, so he split before my first birthday. And pretty much my grandfather has been people that follow the channel, he has been a pivotal person in my life. He was mainly my father figure. And it was interesting getting that perspective because he was born in 1914. So I was raised by somebody that went through the Depression. I picked up some of the, I don't want to see, I almost said cheapskate habits, but it was people from a different time, man. Like my grandparents had a box when my grandfather passed and I helped my grandma clean out the house. There was a box, a big box in the basement. Nice, that rhymes. That's what is that, alliteration? Big box in the basement. Anyway, they had a big box in the basement of Christmas lights that were broken. And I said, Grandma, why do we have these? She's like, well, Grandpa wanted to get around to fixing them one day. Isn't that crazy? But that's just what they did. They saved everything. And that was the mentality that they had. So I kind of had to learn to unlearn that. I've had to learn to unlearn saving everything. And, it's like borderline hoarding. I mean, they didn't keep garbage, but just stuff like that. So interesting. Yeah, I went in the Navy. I joined when I was 17. They took me and I couldn't leave till I was 18 until I graduated high school. But yeah, I had a stepfather, and that was kind of another pivotal role in my story. Stepfather that came in the picture when I was 10. Him and I were like oil and water. We just didn't get along. And yeah, man. So went in the Navy, and I never went to college, but you know what? That was like a life experience. I traveled the world. By the time I was 20, I went through all 24 time zones, the equator, both hemispheres. I went down to Australia, Tasmania, a bunch of places in the Middle East most people haven't heard of, and Hawaii. And I ended up in San Diego, started that journey in Norfolk, which I did not like. Norfolk is pretty much the armpit of the eastern seaboard. So San Diego, beautiful place. I almost stayed there. And bringing it back to my grandpa, if it hadn't been for my grandparents, I probably would have stayed there. But they let me live with them for a little while. And while I was back, I took some of the skills I learned in the military, which is hydraulics and working with tools. And I work in commercial loading dock equipment right now. So basically imagine like a warehouse where a truck backs up to. All the stuff like the things that keep the weather out of the truck, and then the dock plates, and then the doors, kind of like your garage door, but much bigger. And I said I was going to do that for a little while because it paid well. I wanted to figure out, what I wanted to do with my life. And that was 23 years ago now that I've been doing this. So it's been a journey, and that's kind of that thing. I have a wife and 2 kids, which has been a wonderful thing. But I heard you before we started, I was laughing because you're telling your kids you're going to record. Dude, I do the same thing. I'm like, I'm going to record, be quiet. And they'll sometimes forget. And I hear them. I'm like, I can't stop.
Screaming or yelling or arguing. Yeah. No.
I you know what I need? My wife says we need to get like an on-air light that lights up that we can all
in the house so they know.
Yeah, like a professional studio light. But yeah, I have 2 kids. My daughters are 15 months apart, so they are 15 and 14, which has just been a treat, learning to live with 2 girls becoming women. And my wife thankfully deals with a lot of that stuff, and I just go to work, pay the bills, and do my investing stuff. But how old are your kids, by the way?
Man, so my kids, I have 3. Like I said, my stepson, he's 15. My middle son, he's 10, and then my daughter, she's 7. And
nice ages.
Besides the 15-year-old, actually none of them act their ages. My 15-year-old acts like he's 20-some years old. He's a super science nerd. He's into building rockets and all this other stuff. Like I wouldn't be surprised if he's the next Elon Musk. I'm just being real. Like I have no worries with him. He's all focused on science and experiments and math. And then my middle son thinks he's a comedian and doesn't act his age at all. And then my daughter, she also doesn't act her age. So, but no, it's been definitely a blessing in disguise. Because initially I didn't care if I had kids or didn't have kids. It didn't really bother me. It was more up to my wife, but she wanted more kids, and I was okay with it. But like I cannot imagine my life without them. So as much as they're a pain in the ass sometimes, I wouldn't trade it in for a thing. So it's been great. But you and I have actually a lot in common. It sounds like we visited some of the same places, Middle East. What part? Where did you go to? Iraq?
Oh, so not Iraq. I went to Manama, Bahrain, which is the capital city of Bahrain, little island off the coast of Saudi Arabia, I think. I went to 2 different ports in UAE. Went to Dubai and Jabal Ali, which was in both those were in UAE, and then a couple excursions to Oman. Gulf of Oman. That would, it's funny. I know we just had Veterans Day, and it's funny. I always feel funny when people's like, "Happy Veterans Day." I'm like, it's not really a day to be happy about. It's like a solemn day of remembrance. It's not
remembering all the soldiers that died.
Yeah. And I always bring it back to that. And I feel like I never saw combat. I was never in a hot zone. I was in 1998. We were in the Persian Gulf. I was on station out there for over 100 days. So that kind of got old, seeing Jabal Ali for the 3rd time in Dubai before it looked like it did now. I'd love to go back. It looked nothing like it does now in 1998. But I had no real combat experience. So thankfully, I'm not, upset about that. But I really give a heartfelt shout out to all the veterans that actually are in danger and seeing live fire and in hot zones. I mean, the closest thing I had happen was we were snorkeling on an excursion, and I ended up cutting my ankle wide open on a rock. And so they would take the snorkelers, drop them off at this little beach on an island, and then take the scuba divers out. And I had to sit there for like 35 minutes till this boat got back, just ankle bleeding everywhere. And all the guys I was with were like, "Dude, that's awesome." They're like, "You can see your ankle bone." Like, we're looking at my ankle. Just crazy. I was 20 at the time. And it was some English dudes. They ran the snorkeling thing. And for those of you watching that don't know, the Middle East is kind of like Florida for a lot of people. They go down there to vacation because it's usually nice weather. It's warm. They got beaches, scuba diving, all that stuff. And anyway, the person that ran the snorkeling and scuba diving place took me to he's like, my boat was, by the way, another little bit of inside sailing there is sailors call their ships boats. We don't call them our ship. We call it our boat. Like on the thing back here, that's my boat. Like Forrest Gump, that's my boat. And anyway, so they cut to the short of it. He said, we're going into an area here. I got to take you to this little village. They have a medical facility, but he said, if anybody asks, don't tell anyone you're in the military, because we were just learning about Al-Qaeda then. And that's one of the first times I heard it. He said, there's this group that doesn't like Americans and they have a jihad against America. And he said, if they find out that you're an American, somebody can make a call and it could, so I'm like, oh, great. And I'm looking at my shoe filling up with blood, so it turned out okay. I'm here. And that's the short of the worst that could have happened. But so where were you in the Middle East anyway?
Oh, I was in Iraq. So I was doing, believe it or not, I joined the Air Force because I thought it was going to be the chair force. And I ended up doing Army missions actually in Iraq. For one, I got in to the Air Force as security forces, which essentially is a COP, which is equivalent to infantry in the Army, Navy. What's like the lowest position, like job wise, on a totem pole for you guys? What is it? Is it also a military COP? Like the low, like ASVAB. If you score the lowest possible, you only have like a few options. So what is it for you guys? Is it a COP?
I don't know about that because I did awful on the ASVAB. I just wanted them to take me. I was like, dude, I'll do anything. I just want to get away from home. I want to see something different. But when you do that, you're undesignated. They'll put you wherever they need a body. And I just so happened to land on the Stennis. But there is no you didn't, or at least at that time, you didn't have to pick a job to do. You could just be thrown in like I did. I was just like,
I
hey,
know
I
what you're
want to
talking about.
join. Throw me anywhere,
Yeah, it's funny because it was between the Air Force and the Navy, and I remember the Navy recruiter kept telling me, he's like, when you come in, you can come in as like, oh, it was like open general or something he was trying to describe, and he's like, you do this job 1 year, do this job 1 year, you do this job 1 year, and at the 4-year mark, you can decide what you want to do. And I was like, that sounds iffy. Like I was like, I don't know if I want to do that. And then because I was like, what if they put me in a job that I completely hate? It's like, we're only doing it for a year. I was like, nah, I'm good. And then I got convinced in the Air Force, and I'm just trying to leave. And the cop was like the earliest thing, and I did the cop stuff for 4 years, and I hated it. And from after that, I transitioned into the intelligence career field. So I just really got lucky. I had a top secret, and I was trying to get the military, and the in-service recruiter was like, just do me a favor. There's a special ops group over there. They do their intelligence group. Just interview with them. It's like, I think you might like it. It's like, there's nothing else going on here. The housing market just crashed over there. People were laying off. People left and right. The only experience I had was being a cop, and I didn't want to be a cop. So I interviewed, and I ended up joining this special ops intelligence group for 10 years. Nearly. No, sorry, 9 years I stayed with that unit. And then I transitioned over to CENTCOM, and I was doing intelligence work for them for the last like 2-3 years, and I got out last year. I got tired of it. But my first 4 years in Iraq, I remember we got trained by the Army, and I was like, I joined the Air Force. Why are we doing this? It's like, well, you guys are the test dummies to take over an Army mission in Iraq. And I was like, what does that mean? Convoys, towers, prison. I was like, I joined the Air Force. I wanted to, so I did all the crazy dumb stuff. It was insane. And then you get into the intelligence career field, and I did RPA stuff. Very interesting career field that I had. The military took a lot from me, but it also gave me a lot. So, that's how I always see it in short.
So how many years were you in then?
15.
Wow, dude, why didn't you do 5 more? You didn't want to hit the 20? Like, you're so close.
I know, I was done.
Really?
I was done.
Wow.
Yeah, because we in the later end of my career, we were doing a lot of.
Okay.
It was hard. It was hard to sleep after a while. So it got to that point. And that's all I can really say on it, because a lot of stuff is still, top secret. Sure. But it was a lot of it was a lot of stuff. And then I also got introduced to the stock market, and I saw an opportunity to learn something else and pivot and get out of this career field that I was in. So, but honestly, man, I'm not gonna lie. I've been really fortunate. I've been really lucky. Things panned out for me and my family, so I really can't complain at all. But it sounds like you joined the Navy because you weren't getting along with your stepdad. Is that kind of the reason why?
Yeah. So basically, and I say basically, man. So I grew up around a lot of Latinos here, and my whole life. So a lot of them they said, basically, man, so yeah, my stepdad and I just did not get along. He was very religious, and he pretty much told me that when I graduated high school, that I was going to start paying them room and board and paying for food and, help paying for utilities and stuff. And I was like, yeah, I don't really think so. I'm not going to the way him and I a couple times almost came to fisticuffs. But so I literally told the military, I was like, hey, take me. Will you take me and take me like Calgon? Take me away just for a little while to see something.
I just need to leave. Yeah.
So I'm glad I didn't. Before I heard you were in for 15 years, I was going to say, let's pull rank. Who had the higher rank when they got out? But I was only an E4, and if you were in for 15 years, and I'm assuming you were much higher than E4.
Yeah. I was E7. So.
Nice.
Yeah,
that's up there, man.
And it was rough. Look, it was very scary. Because I'm like, man, it's only 5 more years. So it was a scary decision, but I honestly don't regret it. It's been a year and a half now. So I don't regret it. I legitimately don't. I know everyone's like, oh, the paycheck and stuff, but I make good money. I'm good. And also have disability too, so I can't complain with that. But I'm happy. I'm very happy to get out of where I was at. So,
hey, dude, that's much like investing. I mean, you have to do what's right, and something that other people do. Like I guess I can get into how I got into dividend investing. We'll use this as a jumping off point or a nice little segue. So probably about 2017, I just had an idea that I could start trading stocks. I wanted to be a stock trader, kind of like Wolf of Wall Street. I hadn't seen it at that time, but I just thought,
just out of the blue, you were like,
just out of the blue, I was like, I bet I could learn to trade stocks. It can't be that hard, right? You just buy low and you sell high. I knew that much. So that started it all off. I found Robinhood because I didn't want to pay commission, because I was looking at ones. I'm like, $5 a trade, like Scott Trade and stuff. So I found Robinhood back then, and that just started it. I started trying to trade penny stocks. No clue what I was doing. Would constantly buy right after they were hot and almost at the near top of their run up, and so I would buy high and then sell low. That was my penny stock trading experience. And then I wanted to get into swing trading, so I watched some YouTube videos. I became a YouTube certified swing trader, and I found some Udemy courses, which actually that taught me, like, I use a lot of it's silly because it doesn't work every time. Technical analysis using the charts to try and predict the future by what's happened in the past. And, it's more of an art than a science. It tells you something that's likely to happen, but I swear to God, it's literally like a 50-50 coin flip. If what you chart out is going to happen, happens. But, so I tried swing trading and I did a little bit better in that. And I don't remember exact. I think it was Merck. We looked for the setups and where to get in and where to get out. And two things I did. Well, one thing in particular that I really was bad at was I kept pulling all my stops. And every time it was going up, I was like, all right, I'd set the sell limit and it would hit. But when it started going down, we would have that 10% rule roughly. But then I would keep moving it and moving it and moving it. And I ended up just holding on to things for way too long. So I found out that I'm really good at holding on to things, because when you're trading, they say don't marry your trades, you just date them quickly. Well, I ended up falling in love with and marrying every one of my trades, no matter what it was. So it was like really hard to sell those. But, one thing leads to another, and I received dividends. So after I had sold Merck, we'll just say it was Merck, even if it wasn't. I'm pretty sure it was. I had already sold it. And then, I got a thing. I was like, dividends. I was like, what? Like, I got paid money. Like, it wasn't much, like maybe $1 or something. And I was like, that's stupid, $1, but that stuck in my mind. So I still tried the swing trading. And, the one that opened the door to dividend investing was, oddly enough, NEO, ticker NIO. I had bought NEO on September of 2018 when they IPO'd. I bought 2 days after their IPO, and it was right around like $10-ish, and I was going to ride it up to 12. And it kind of did get that area, if I remember right. But then I started, watching it come down, and I pulled my stops like I was always doing, and I kept putting more money in and more money, and it kept going down. Every time I'd buy more, it would go down further and further. And it got to the point where I was just every day dumping money into NEO, and the damn thing it would not go up, and, it wouldn't go above my average. I just wanted to get it to that average like so many people do, and it just wouldn't get there. So there I was losing sleep. It's, 3:00 in the morning when pre-market opens, by the way. I had a fun little app that I still use to this day, Stock Twits. It's just a degenerate playground for people. I don't know why. I like using it for price tracking, the pre-market movements, and getting a few laughs, I guess. So if anybody hasn't used Stock Twits, it's a fun little. Do you use Stock Twits? Have you heard of it?
I used it before, but it is kind of like the Wild Wild West. So that's what I was like.
It can get pretty raunchy.
Yeah. I was like, I'm good.
You can say whatever you want there. There's no, people can block you, but the platform, to my knowledge, doesn't. But anyway, so I'm losing sleep like 3 nights in a row, and it was one of those nights. So I had trouble falling asleep because I'm like thinking, okay, I just put more money into NEO, and I just need to see if it's going to pop. So I would wake up at, whatever it was, 3:30 or 4:30, I think pre-market open, something like that. And it just got to the point I was like, I can't do this, dude. Like, I'm losing sleep. And I remembered my grandfather talking to me every once in a while. He loved investing in like mutual funds, and he would buy stocks for us. He didn't have a lot of money, but when he could, he would buy stocks. And I remember him specifically telling me that he liked Walmart and Disney and AT&T because they paid good dividends. And of course, when he's telling me that, I'm, teenager or something, and I could care less. So unfortunately, I wish I would have been able to pick his brain more. But I remembered him talking about dividends. So there I am. My wife's, sleeping next to me. It's 4:00 in the morning, and I Googled dividends, and then that's why I say Alice meet the rabbit hole. I went down it, and I'm still down it, and I'm loving it because it suits my style of buying and holding. You get paid those dividends for just holding. All you do is you just hold. Like, I was like, I can do this. Like, you find good quality companies that you want to hold. What does Warren Buffett say? If you don't want to hold something, or you can't see yourself holding something for 10 years, you shouldn't hold it for 10 minutes. And I remember reading that quote. And then the one I just did a video on was the quote that changed my life. Literally was Buffett saying, if you don't find a way to make money while you sleep, you will work until you die. And that put everything into perspective. Like, wow, this really is important. I should have been doing this more than investing in the mutual fund, just doing like 3% a year. And I didn't even know where it went. Just didn't really pay attention. But thankfully, I at least did something all those years. But that was it, man. And I just grew to love dividend investing. And then it just became a journey of trying to find the best stocks to invest in, the best companies, and learning about how you're not buying a ticker, where before, when I was swing trading, it was literally just a ticker. Didn't really look at anything about these businesses that I was getting stuck with, and just buying and selling on that price action, momentum trading, which I found is, in my opinion, momentum trading is pretty much lemmings following each other, and just you got to hope that you're not going to go off the cliff with the other lemmings. So, that's no offense out there to all the people that swing trade and can do it successfully. I know there are people that do it, but for me, awful at it, just awful. And dividend investing, man, it just fit me like a glove. So that's what I've been doing, and learning to analyze businesses better, because I want to own those businesses. Is like I was saying, we're owning businesses. And I tell my kids that I have a custodial account set up for each of them, that we own businesses. You own Starbucks, like they each own Starbucks. And I tell them, like, how cool. Of course, they're just like, whatever, Dad. Like, they're, I'm hoping, I'm like,
on their phone. Yeah, whatever, Dad. Cool. Yeah.
I'm like, please God, let it catch and take one day here, and let them be interested in investing. I'm like, the father waiting, like, for them to tell me, like, talk about stocks, like they want to find out more. But anyway, so I got them set up with a custodial account. I use their stimmy funds because we didn't ask for those stimmy funds. We didn't really need it. They government just gave it to us, so we gave some of it to charity. But all of their stimulus funds, I opened up the custodial accounts, and I hand selected like 12 dividend stocks, and I said, okay, you can pick, how many ever out of these, and we'll just put your money into that. So they pretty much picked some of the ones, and then they picked a few that I was like, all right, let's make it fun. What do you want to invest in? Like, they were playing Roblox at the time. So they have Roblox, which has gone down substantially with all the other
same here. Same here. So my kids have
it. They own it. And then Disney, Disney cut the dividend, and they still haven't resumed it yet. But that's I don't know. I'll just stop there if you want to ask, because I'll just.
I do have a question.
Probably already guess. I'll just keep mouthing on.
No, dude, you're a great guest. Trust me. I love when my guests talk, because the show is about getting to know who they are beyond just the YouTube channel. No, but I'm serious. That's the reason why I created this. I was like, who are these people beyond just the YouTube channel and the financial literacy and the courses and stuff? I want to know who these people are. That being said, though, you started with the Neo story. Did you hold?
I'm still holding, man. I am still.
Oh, wait, you didn't sell at the top?
No.
Oh.
Well, here's why. So this is the thing. Neo was at $9, right? So when Neo was at $9, I sold like a month or two long covered call because I wanted to get out. And when that became, or I saw it was optionable and I was learning options, covered calls, So I said, you know what? I'm going to get dividends from NEO. I'm going to sell this stock. I don't want to hold, because at the time I think I got up to like 150 shares. And I said, I'm going to sell this thing. So it was around $9. And I think I did like a $11 covered call that was maybe a couple months long. And as soon as I did that, like a couple weeks later, it started going up and up and up when all the EV stuff was hot. So there it was. I think I was at, I want to say it was like $10 or something, I think I said. And it was at like 15 or 16. And I was like, well, I'm going to lose money. Like I'm only going to get paid up until $10. So I kept rolling it forward. And it was expensive for me to buy that back. So it was like,
Correct, yeah.
I don't know, like a few $100s to buy that back and then roll it forward. So long story short, I ended up rolling it forward like 4 or 5 times. And the last one I did was maybe at like $30 a share. And I think it was at 18. So I rolled it forward to $20. And I had to go like a year. I think it was as far out as like a year and a half or something. And I actually made money on that one. But there we are, dude. It just rocket shipped up to $66 a share. And I'm just looking like,
And you're stuck at this
so
price, yeah.
I'm like, I'm only going to get $20 a share. And to buy it back is, like $4,000 or something. I'm like, well, I can't do that, man. I'm not going to do it. So I just said, you know what? Well, whatever happens, I'm just going to let it roll off. And then it started coming down and coming down and coming down. And it ended up getting to, I want to say like 24 or 25 when I actually had it called away at 20. But then I was like, oh, I still want it, Oh, by the way, those 50 shares I had sold those at 12. It was like 12.47 or something I sold it at, because that covered all the shares so it made those like basically free, because I think my cost basis was like $6. I had like 150 shares at $6. Crazy, I know. But yeah, so I ended up having those 100 shares, and then they got called away. And I was like, you know what? I kind of want to hold this, but in my retirement account, in my Roth. So I ended up moving it to the Roth and rebuying it, and then selling some covered calls and cash secured puts to get back in. So I still have the 100 shares. I think like 121. I bought a few more or something. But yeah, NEO was a story, man. I somehow just got screwed. And I was looking at the chart thinking like, dude, how high is this going to go? This doesn't feel like it can continue. So do you have any story with NEO where you
actually people were telling me to buy NEO initially when it was like, I think $10, and I didn't. I hesitated because I wasn't familiar with it at that time. So just to be full transparent, I just really started getting heavy into like investing and trading 2 years ago. 2020 is where I started the light at the end of the tunnel, and I was like, this is my opportunity to get out the military. So that's when I started taking it serious. But I also went down a lot of paths that took me the wrong direction. Courses, trading, gurus, all that negative side to investing and trading. But I also learned a lot through that. NEO was one of my buddies who lived in Vegas. Was like, dude, there's a guy I work with. Apparently he's a genius. He's telling me to buy NEO. You should buy NEO. I was like, this is some Chinese EV company. I've never even heard of this company. I was like, no. And of course, it skyrocketed. And I was like, man, this is crazy. And I did a few options on it, and it was like a hit or miss. Sometimes I made money on it. Sometimes I didn't, because then there was like a cycle where it just would drop significantly, and then it would run up again significantly, and then it was drop. So it was just too much. But I never liked the company itself. Like long term, I was never comfortable paying $60 for it, $40, $30, $20, $15. I think it's what, $8 now or $7. I don't know where it's at right now anymore. But
it's right around 10. It's or no, actually I take that back. It's like 11.40, something like that. It's like almost $11.50 in that range right there. But it was like $9 just a week ago or so.
Yeah, I was never a fan of it, but I did when it came to falling into traps. I definitely fell into Square. Square is my story. Everyone knows that. I always complain about it, and believe it or not, I actually took an L. That's like my first big L that I ever took in long-term investment wise. I bought Square years ago, about 10 years ago, for $20. I think when they first went public or something. Didn't know what it was. It was in my Robinhood account. Everyone started with Robinhood, right? That's where everyone started. And I think in 2020, it ran up to like $120. So I sold all my shares. I was like, this is amazing. And then it kept running up and it went to like, I think over $200. And one of these financial gurus that I was just following, not knowing much, didn't know how to read financials, didn't know how to really look into a company. I thought I did, but I didn't. But I was listening to this person. He's like, Square's the new JP Morgan. So when they had their pullback, which wasn't a pullback, it was we were falling into a bear territory. So I bought at 190, bought more at 175, 150, 130, and I just stopped. I was like, this is it. This is ridiculous. I'm just pouring money into like this money pit. This is everything's just dropping. So yeah, I finally sold out of all my shares at $60. It was hard for me to do it because I just don't believe the company was going to get back to my average, which was $160, $175, something like that. And I was like, I could take that money and allocate it elsewhere and probably get my money back quicker than relying on Square. So yeah, that's my Square story. I didn't have over 100 shares, so I couldn't do like cover calls or anything like that. Had I had that, I probably would have done cover calls until I'm made a little bit of money back. But I've made a lot of mistakes when it came to trading. Luckily, I didn't fall into the group of like penny stocks or these growth stocks that a lot of these financial YouTubers were pitching, like the Tattoo Chef or AMC or any of that. Well, I take that back. AMC, I did buy AMC in 2020 for $2. I remember it was December, and me and my buddy, I was like, dude, AMC's at $2. I was like, best case scenario when COVID's over, when they open up stuff, it's gonna go to $4. So I was like, I'm gonna buy a bunch of shares, and he was like, I'm gonna buy some options. And he calls me up one day and he's like, dude, do you see AMC? I'm like, what happened? I was like, is that $4? He's like, it's at $12. I was like, what? So I immediately sold because I didn't know what was going on with this short selling. Like I was not aware. I just sold out of the
sold
position.
To me. That's too funny because I bought AMC. I bought 2 shares of AMC, and I talked about it on Twitter. I was like, everybody, I'm buying 2 shares of AMC to see if it rocket ships. And it was like $12 and change I bought it at. So I don't remember the exact number, but yeah, it was in the $12 range.
No. And then it ended up running like crazy. And I was like, man, this is insane. But I was disciplined enough not to buy back into it. Like I did not do that. The only other one that I ever played like that was DWAC, the Trump stock that everyone was talking about on social media. I was like, it was at $45. And I remember I told my wife, I was like, hey, I think this might get like short squeeze. Trump's talking about, investing into it. I asked my wife, I was like, you cool if I take like $300 and buy like a couple of shares? And she's like, whatever. It's like, just lose some more money like you've been doing. I'm like, whatever. So I did that. And the very next day I woke up to like 300%. It was amazing. And then I got greedy a little bit. I didn't sell all the shares like I should have. And then they did a stop halt on it too when I was trying to sell out of it. But I mean, I made pretty good money off of those couple shares. So I was happy with that. But never fell into the trap of a lot of these hype stocks like some people did. So yeah, unfortunately.
I sold AMC. Thankfully that I sold in the 60s. I can't remember the exact, but I just sold like 2 shares. I was like, you know what, if this runs at 300 or whatever, so be it. I'm just going to be happy with, this huge gains I've made on it. And yeah, so it's, I don't play the lottery or gamble. And of course I stumble as I say that because I just did. I bought one $2 ticket for the Powerball when it was whatever $2 billion or so I tell everybody, I was like, all right, it's a couple billion, I'll buy a ticket. I don't fart around with 2 million, 3 million here and there. So but I'll buy penny stocks sometimes if something everybody's talking about, like the bad one I did was Voyager. Right after Voyager was starting to go through that, I bought 100 shares of Voyager at, I think it was 65 cents. So $65.
$65.
It was like 3 days later, it was at like 12 cents a share. So I was like, well, I probably would have been better lighting that money on fire. It would have been more entertaining, which I still hold those 100 shares. But funny enough, I was just watching the whole FTX meltdown. Like that's, dude, for a minute I was doing the crypto stuff. I think most cryptos are going to go away. I think it's still the wild, wild west when regulation comes in. I think they're having like the banks did, and I heard in the 30s, like their Glass-Steagall moment, like the banks were just taking, depositors' money and investing in like these risky, crazy things, and then they were losing money on that and down, and then the bank runs, people wanted their money, and word got out. So there, a lot of banks were insolvent. The same exact thing, dude. It's crazy. Same exact thing is happening with these crypto exchanges. And I was part of Celsius, man. I moved all my crypto, which thankfully, and I feel bad for some of these people. There's people that had like their life savings in them, but I had it got up to about 4,000 or so worth, but I think we've probably put in maybe like 2,500 ish of our money into different cryptos and Bitcoin and I don't know, Solana and stuff like that. But I kept moving it all over to Celsius to get that yield. And I was calling it my crypto dividends, and it went to zero because, well, technically it's still there, but we don't know what's going to happen with that. So yeah, Celsius, same thing, man. They were lending it out and doing crazy stuff with, and we don't know exactly what they were doing because they're not publicly traded. They didn't have to tell anybody anything. So I think most of these crypto exchanges are going to go away. I think most of these tokens are going to go away. There's not going to be 10,000 tokens, people making, you and I could make a token right now and start dumping it out there. Yeah. But I think that's going to go. I still think that Bitcoin will probably be around. Ethereum, I think, will probably be around because they just do different things, which is funny. Everybody touting Bitcoin as the store of value. And then I'm looking at it. It's down like 76% from its high when the market started crashing. I was like, some store of value that is. Like it's moving like a tech stock. When all the tech stocks were getting crushed, Bitcoin was getting crushed. And I think that's because a lot of tech traders or a lot of tech investors were also investing in Bitcoin and Ethereum. But yeah, unfortunately, I have, I don't know, like $500 worth of crypto on Coinbase, and the rest of it's over at Celsius. But I guess I'm writing it down to zero. And, in our thinking of it as gone. If I see anything, I'll be surprised. But it's unfortunate. But to get to that point I said about being smart, is I was telling my wife and telling everybody, and I don't know, maybe I didn't want to believe it, but I at least was telling people that this money I'm putting in, if I woke up tomorrow and all the world's crypto was like magically gone and they were like, hey, it's all gone, I would have been like, that sucks. Like, it really sucks, but it's not going to ruin us. I mean, it was less than 1% of our net worth. So, you learn. Like you said, when you say you lost money, that is just your tuition to the market. And anybody watching, when you lose money in the stock market, because you will, even Warren Buffett loses money and does things that he learned, it's your tuition to the market, I think.
It definitely is. Now, what's your thoughts though on the whole So I hang out with I'm in various different, I guess, sectors within the financial literacy space, the drama section, the course section, the dividends. Like, I'm everywhere pretty much, and I get along with pretty much everybody, right? So I interviewed Tom Nash. I don't know if you know who he is. He's a pretty prominent YouTuber. He's got like over 250,000 subscribers. Really? He's kind of up there with like Graham Stephan, Andre Jick. Do you know all those guys? So they all were sponsoring FTX recently. So a lot of them are getting a lot of crap for the fact that they were pitching FTX in almost every single one of their videos. And so I have like mixed feelings about it. Like, how, like, should they be held accountable, or is it just like a celebrity getting paid to promote something? So it's kind of twofold. I feel like, because when I interviewed Tom Nash, I actually talked about FTX, because at that time the whole Voyage Digital thing happened. And he told me how much he was getting paid for FTX. He only had like a sponsorship for a month because nobody was signing up, so they dropped him. But he was like, no, it's like a legit company. I was like, I don't know, man. With Voyage Digital, I was like, I don't know. He's like, no, it's like, it's really legit. Like, he legitimately believed like this was a legitimate company that had legitimate backing, which it kind of did. It had SoftBank, it had BlackRock, it had celebrity spokespeople, and then it went to crap. It went to zero, basically. So it's like a lot of people are upset with these YouTubers because they're supposed to be in the finance space and they're supposed to be smarter and they're supposed to be able to, realize what's real, what's not real. But at the same time, I'm like, that one did seem legit when you looked into it, but I still had a feeling like something's off about the company. but I'm in general feel something's off with crypto, period. Like I just don't believe in it like other people do. And like you said, I have $2,500 max put in crypto, and 99% of it is in a coin called Quant, which happens to be doing very well. I cannot complain. So I bought it at 92. It ran up to like 200, but it recently sold off. I still think it's above 120, 140.
Yeah.
But I don't, I just don't believe in that space. It's just too unregulated. It's too scary for me. I just never felt comfortable putting a large amount of money into Coinbase or Binance. That's where I had a little bit of money in there. Binance too, which is only like $15 in there now. But I just never felt comfortable buying crypto because of the shadiness that comes with it. The NFTs, the pump and dumps, anybody can create a coin, like you said. That stuff just makes me feel weird because like you can't just start a company today and tomorrow be on a stock exchange. It's not going to work like that. So that's why I felt real suspicious with anything crypto. And I feel like my intuition was kind of planned out somewhat, you know? So, I lost money in crypto though too as well. So I kept buying. The first time I bought in 2013, 2014, I bought at the high for Bitcoin. And then I sold at the bottom. And then it ran up like a couple months later in 2020. And then I tried to buy in again and it dropped once again. So I'm just like, crypto's just not for me.
Yeah, man, it's God, you know what? If it gives me a newfound, I don't know, not passion, but it kind of feels like, I'm with my wife and I know her well and I know that I can trust her and she loves me. And then you see like some, young hot chick over there and you got your eye like, look at that. And then, you find out, I don't know, she has like syphilis and gonorrhea or something. You're like, oh yeah.
Oh, is it still worth it? Is it still worth it? Yeah, see,
not all cracked up to be, but I feel the same way, man. It's, Warren Buffett, one of his problems with, he can expand that out to like golden, but the crypto, like how do you value something that has no cash flow? Like that's like it has a price, but how do you put a value on something that has no cash flow? Like we can value businesses because we can do a discounted cash flow analysis, like looking at building projection models of what we think they're going to make out into the future and discounting that back today. But with crypto, man, it's literally just like the greater fool theory, that it's only going to be worth what somebody's willing to pay for it. But I see that at least Ethereum has utility. It's kind of like the internet. I mean, there's tons and tons. It's like the New York City of, where the dApps, the decentralized apps are being built on. And so with that, that's why I pretty much have I have crypto in a little bit in Bitcoin still. A lot in, I say a lot, for me, a lot in Ethereum and then some in Algorand because I use Lofty.ai, which I'm still on the fence about. I think I might pull that money out and put it into some REITs. After the first of the year, I'll use that to fund my my Roth portfolio, which you can only put in $6,000 a year. That's the max out. But yeah, it's all stored on the Algorand, blockchain, and you got tokens and whatnot. But it's an interesting thing, Lofty.ai. It's tokenized ownership of real estate. So they buy properties and you vote on what, want to happen, or what maintenance or raising the rent. And it's real properties. Like there's a few in Chicago I own, and I actually drove by them to look at my property. Can't go in, obviously. But I was just driving by to look at it. And it's an interesting thing. You get paid money every day. Every single day you get your rent, I guess. They break it out into the month.
So like how much is that?
It's like it was like $50 a token for the real estate, but now it's been, because I got in when it started like a year ago. And yeah, it's so the rent will be like a penny a day is what it kind of turns out to. I think it's about that. Over like a year, I'm up to like a little over $50, I think, something like that. I was kind of doing it as an experiment, but now with the whole crypto thing, I'm like, I don't know, like what happens if Algorand goes away? Then just like all that gone. Like they say it's contractual, and the blockchain is just keeping it, but it's a definite concern. And I'm getting nervous, a little bit nervous about it. But yeah, man, I'm with you. I think most of these are going to go away, and it is kind of like the manias we've seen. I'm reading a book on Warren Buffett, and in the 1960s, there was the technology phase, the go-go stocks. All the company had to do was say that they were technology based.
Mm-hmm.
Just say we're a tech company, and just people would buy. And we saw that with the .com.
.com, yeah.
I don't know if you remember that. Or I don't know if
I do. I do remember.
How
I
old are
wasn't
you?
interested in investing, so I'm about to hit 40. So I do remember, because I think you're 44, right?
Mm-hmm.
Yep.
Absolutely.
I do remember a .com bubble. Wasn't interested in stock market. Like literally, I didn't grow up with any financial literacy whatsoever. So all this stuff is like self-taught within the last 2 to 3 years. And then just throughout my life, just like credit cards and stuff is just stuff that I picked up. But but I do remember anybody who put .com in the end of their business, they would make millions of dollars for a while, and then everything went to zero. So
yeah, I knew people. My uncle had a good friend that quit his job to day trade .com stocks, and remember him telling me, he's like, man, he's like, you just got to buy. If it has .com, you just buy it. It just goes up. He's the easiest money you'll ever make. And then the crash happened, and then he was back at work. So kind of like that
basically
meme I
2020.
saw. Yeah, it's kind of like that meme I saw with the McDonald's employees, and then it says "Welcome back, Diamond Hands." So
Oh yeah,
it's all these kids that quit the friar job to be Diamond Hand investors.
Yeah, it's unfortunate because 2020 did, but it's funny because I actually did that. I quit my job, but things just worked out for me, not for everybody else. But 2020 really did give you that illusion, like, man, this is easy to make money. So for a lot of us, the .com bubble is what 2020 was for us, for a lot of kids too nowadays. So they will remember that moving forward, like, hey, I made thousands of dollars and then I lost it all the next year. So they will remember that moving forward.
And for me, that's it's harder to do what I'm doing, and it takes a lot longer. It's really boring. But just buying like PepsiCo, I did a little experiment. I bought 1 share of PepsiCo, 1 share a week for 100 weeks to get to that 100 because I wanted to sell options on them. And I've been doing that a little bit, but I had some close calls. So my cost basis on that, and I share everything on my website, I update the portfolio, is $150 on 100 shares. And a couple of times I've sold covered calls at like 180, 180, 250, and they almost hit. And I was getting nervous because I was like, well, now I'm going to have to pay like $3,500 or $3,200, whatever, of capital gains tax. And I don't want to do that. So thankfully it didn't hit. But that one I've kind of backed off. And now if I sell covered calls, I'm doing them way out. Like, I don't know, it'll be like 8% above the current share price. And I do it by the week. I do weekly covered calls. I've really gotten into the weekly covered calls. One of the guys I talk with on the channel, Jeremy from a website called Dividend Stockpile.com. And he kind of got me into doing the weeklies because I used to do like 30, 40 days out to get more premium. But dude, that's a lot of time. So much can happen. I mean, I think you said you're obviously pretty proficient with covered calls and whatnot. So what do you think about that? I mean, what's your sweet spot? Does it depend on the stock, or do you have a set thing you do?
So I just started this, and I wish I had. That's why, and I'm going to talk to you a lot about this when it comes to like your dividend and cover calls. But I just got into cover calls over the summer. I was trading, and I was doing really well last year, and I just wasn't doing well enough during the bear market. I don't know what it was, probably like a mental block. I always felt like I'm betting against myself. So when I started doing the cover calls, I ended up doing it on stocks, like the crap stocks. I was like, let me test this out first. I don't want to buy 100 shares of Apple. I didn't have 100 shares of a lot of stuff anymore because I actually started selling off a majority of my portfolio on the beginning phase of the bear market. That way I minimized my losses. So I bought stuff. My very first one that I bought, I played with paper money first. And I was like, I think I got the hang of this. I was like, I think I understand cover calls. Matterport. I bought Matterport, which is a terrible company, but it was $4, I think, at that time. So I was like, okay, that's $400 for 100 shares. Let me do that. And I did a cover call, and I rolled it twice. And I was like, this is awesome. Then I got called away, and I was like, I mean, it's chump change, but the risk was really low. I was like, I like this. And then I did it with JetBlue. JetBlue had dropped down to like $7, and I did with JetBlue, and I rolled it twice as well, and then I got called away, and I was like, "Hey, this is easy money." Then I went and I started doing it with a lot more of these crap stocks. SoFi, I'm still in SoFi. I just kept rolling it. My Norwegian cruise lines, that one has garnered me since the summer. I got it in June. So far, it's $600 to $700. I'm up by simply rolling Norwegian, and my cost basis for that at that point, I think it's like $8 or $7. The one thing I hate, you have to manually track it, right? Is that what you have to do as well? Like you have to manually track your cost basis, or what do you use to track it? Because on E-Trade, it doesn't do it for me.
Okay, I do everything on Schwab, but yeah, it kind of auto corrects my cost basis. So I had you want to talk about sometimes when covered calls are not a great thing when you lose the underlying. I did one on JP Morgan. I had bought at 115. I sold a cash secured put for $115 a share, and it got assigned. But with the money I got, it dropped that cost basis to like 113 and change. So it did keep track of that. It just lowered my cost basis on Schwab from doing that. But yeah, that one, then I sold 2 different covered calls, and it finally got called away at 122. And I thought about rolling it forward, but I was like, no, I'm looking at the chart. I'm like, it'll pull back to like, I'll get in next week. It was on a Friday. I was like, I'll get back in at like 119, 118, something like that. And then it just opened up higher, and it has just been marching up, and it's at like 134 right now. So, I made, I think 130, 140 bucks on the covered call to get it to 122. But overall, I mean, I essentially went from 113 to 122, then rolling that. I made some good money there. I mean, that was, I don't know. I can't do math right now. $100.
Yeah,
whatever it is from 113. So 113 to 122, over $1,000, right? Yeah, I think. Yeah, because that's $10. So I made over $1,000 on that, in total. Nice. But it's at 134 right now. So from 122 to 134, had I just held the underlying from that cash secured put I sold, I would have, of course it wouldn't be realized because now it can pull back and whatnot. But those are the times that it kind of stinks. Same thing with Starbucks. I had been buying it in the 70s. I sold a covered call. The shares got called away at 82. And, I used some of that money for the JP Morgan cash secured put, but now Starbucks is at like $98 a share. So.
Yeah, it did run up. So that's I guess the downside to it if you don't want your stocks to get called away, right? So I don't mind, like everything I have now, they're all stocks that are under $10. Because I don't have the balls yet to go and buy Apple at a high price or anything. But I've been doing it with stocks literally have been beaten down to the point where it's more just upside to it. And if not, I feel like I didn't lose that much. I just hold on to it until the market pivots. So I started one on Warner Brothers the other day, and now it skyrocketed because of this 2-day rally. And I don't mind collecting the $30, $40. I usually do monthlies though, so sometimes it just depends where I can get the most premium at. But I never thought about it like what you said, where you could just do weeklies. It's like it might be a smaller amount, but it frees up that cash for you for the following week and stuff. Versus because a lot can happen, like you said, a lot can happen. Like Warner Brothers, I think is now at $12 maybe, so I have to roll that one or just let it get called away. So it's one of those situations. What I liked about your channel though, and again, that's why I wish I had known about cover calls or just paid more attention, because everything that I was exposed to when I first got into this was just naked puts and calls and how you can make a lot of money that way, and that's it. So that's all I was used to. I was like, okay, or swing trading, buy a bunch of stocks here, move with the momentum. So it was just I was taught everything completely wrong. There was no safety, but I'm to blame because I chose not to leave this little bubble that I was in and do research and really kind of expand my mind. I just always felt like, these people I see on TV, or not on TV, on the computer, on YouTube, are smarter than me. So therefore, I should follow them and do what they're doing because they said that they're millionaires. But then once I started my YouTube channel, got a little bit more familiar with how the business of finance works, financial literacy. Then I started catching on what the hustle is. I've been approached by people saying, hey, work with us because, I think you have, this talent to do this and, you could be part of our team. And I'm like, no, I'm good, man. I don't like X, Y, and Z who you guys work with. There's a lot of shadiness within that space. So once in the summer when I learned about the cover calls, I was like, I really like this. And then I also like cash secure puts. And then I realized cover calls works best in bear market and cash secure puts work best in a bull market. And I was like, I need to get away from this mindset of trying to get 100% in a week. I was like, dude, it's a compound effect. Small wins add up after a while, and it's low risk. I can sleep at night. Everything's fine. Like I can relax. And that's how I came and found Ryan. And Ryan recommended you. And I'm like, man, this is awesome because you guys found something that you liked and you identified that I feel like early on than most people. Like you guys did your penny stocks or whatever, and you were like, this is not for me. And then you found this dividend, and dividend, regardless, like you said, you like holding. So that's the way to go, right? And then you could take those 100 shares and then just do cover calls on it. And that's more money. And I was like, man, I never really thought about that. I should have, because initially I started with liking dividends only. And I straight away. So
I mean, there's a risk to everything. There's nothing is risk free, even if you're buying bonds. Because if inflation rises, the value of the bonds drop. They move inverse to it. So there's the money or the time value of money risk, I guess, with bonds. But everything has a risk to it. And one of my rules of thumbs when I do sell cash secured puts is I only do it on stocks that I will be okay being stuck with, which did happen. It happened with Intel because I sold a cash secured put twice at 47 and I did weeklies and I made good, pretty decent money because I was watching the chart. And the way I do it is I look at the resistance levels and I pick that resistance level, which doesn't mean jack because sometimes it just smashes through the resistance level. Like what's that guy my kids watch? I'm gonna smash it. What's his name? Oh my god,
Kramer?
Kramer, no, the cartoon guy.
Okay.
Oh my god, I'm gonna wreck it Ralph. Yeah.
Oh,
just
okay.
I'll wreck resistance and support lines sometimes like nothing. But yeah, so I looked at there was support with Intel at like 46 or something, but obviously the bottom fell out. And dude, I'm in at 47, 100 shares at 47, and it got down to like 25. So I can't sell covered calls on it right now because I'm so far down.
So low, yeah.
Like there's nothing. Like even if I go out, because I don't want to take the risk of, Intel announcing they cured cancer and now it goes up to $500 a share. And my cost basis is 47 and I've got a call out there for like 29 or something. You know what I mean?
Yeah.
So so I've been stuck with Intel, but man, while I'm stuck with it, I'm still getting the, like $47. I think it's at $47 every 3 months. Because I think it's 47.5 cents a share somewhere. Maybe it's 42.5, something like that. Too many numbers in my head, but anyway, so times that by 100, and so I'm getting paid while I'm waiting, and it may take years, but thankfully that's one of my rules of thumb is I have to imagine that if this gets assigned on the cash secured put, that I may be stuck with this for years. And will I be okay being stuck with it for years? And on some of them, like when they're, non-dividend paying stocks that I'm not too comfortable with. So I won't, that's one of my rules that I won't do that on.
Yeah, I'm glad that you actually mentioned that you got into Intel, cash secure put, you wanted to do cover calls, but it went to 20, so you can't do that, right? It's not that you can't do that. You can actually do it. It's just that it's more riskier, right? So I have a friend who literally texted me the other day. She's like, oh, God, I finally understood cash secure put. I mean, cover calls, like you were saying. I was like, cool, what'd you do? She's like, I did a $65 call on my Square. I was like, wait a sec, you were buying Square at the same time I was buying Square. Isn't your cost basis like $100 some? She's like, yeah, it's 145. I'm like, well, here's a risk with that. I was like, what's going to happen is if it blows above the 65 on like close to expiration date, you're going to get your shares sold at $65. So that little money that you made off of it's not going to offset the massive loss you have in Square. So, and she actually experienced that because it ended up running up these past 2 days. Everything ran up. It's like at 67 now. So the only thing she can do is kind of roll it up. So you have to kind of roll it up until you kind of get back into where you feel comfortable at to sell for a loss. But that's what I was telling her. I was like, I don't do it like that. I buy stuff at the bottom and I buy cover calls out the money, not where I bought it at, because then I would take an L. Like if something happens, I'm taking a loss in that. Like I'm not going to buy shares at $800 for a share. So we spend $800 and sell a cash secure put at $6. I'm not going to do that because I'm basically saying I'm betting that it's going to go below $6. But no, I'm not doing that.
Yeah.
I'll buy a $9 or $10. That's how I do it. So
yeah,
that's
and
the
it's
easier
just,
way, the less risky.
yeah, and that's just for me. Everybody's different. Everyone has their own style. But for me, like it happened kind of a worst case scenario with Intel. And like you said, I mean, my cost basis is $47 on those 100 shares. And, even weeklies, like I don't want to go way out. But yeah, and obviously as the price moves up, the premiums go up if you're selling covered calls. And like you said, though, but if hers is at 65 and it's at 67 now, and she wants to roll it up and out, well, she's going to have to go higher than 67, or to go to 67, but you still have to buy that contract back, which is at least going to be $200, right? Because that's the difference. And then probably a little bit of, time left in however far you're going, paying that premium with the, was it theta, the time decay? I don't remember the Greeks.
Yeah.
I like looking at delta because to me, that's the easy one. That's if it's 0.12, okay, this has a 12% chance of being in the money at expiration. And of course that changes and shifts and it's nothing concrete, but yeah, you're still going to have to buy that back and pay $200 to buy that option back and then sell another one. So you may even only make, $10 or something or $20 by the time it's all said and done, but you're still going to get more for those shares. But yeah, it's just something that, man, it's a big learning lesson. It's something that I tell people you don't get in a week or a month. I mean, it's just, there's mistakes to be made that you learn. But for me, that's what I sleep well at night with. Yeah, it sucks that my cost basis on Intel is 47 and it was literally got down to like $25 a share. And like you said, man, I can't, well, I could, but the craziest things can happen. And I just don't want to get caught with a loss, just to make the $12 or something on a covered call.
Yeah. And I feel bad for like you and Ryan, because I know you guys both invested in Intel and AT&T, which I also, by the way, had invested into Intel and AT&T. I actually have a friend. His name is Mark Moreau. He hated Intel, and he's more of an AMD guy, and I was an Intel guy, and I was like, no, man, Intel, like they shifted their entire their structure, their leadership, things are gonna be better, blah blah blah. And I was actually buying around the 30s all the way to like the 40s, where you did a cash secure put. But I think my memory sometimes off, but I think I had up to 40 some shares. But that last earnings, they had like an earnings that was really bad, and I got out immediately. The minute I saw it dropping, because I was on an earnings call and it wasn't good, and I was like, okay, it was like extended hours. I was like, sell. Yeah. Because I think it was in the after hours, so I sold all my shares. And same thing with AT&T. I was buying AT&T at $18 a share, and it was going up, but I had a stop limit that if it dropped back below $18, because I knew there was a resistance there, the next level I think was going to be $15 or something like that. So that dropped, and I sold out all my AT&T as well. So I got lucky with those two. I didn't end up being a bag holder.
Yeah, with Intel, it's going to be interesting, though, because I heard that same earnings call, and Pat Gelsinger, the CEO, who, by the way, he was the chief technical officer back in the day, and Bob Swan was the CEO that he replaced. Bob Swan was the chief financial officer, the CFO. So it was kind of a different thing. Bob Swan kind of left him a mess that he's coming in and cleaning it, and he's turning the ship around. So Pat Gelsinger is like, the employees love him. He's a really high-paid CEO, by the way. That's maybe one of the bugaboos. But yeah, Intel, they said that because they're investing so much money, and the PC market has really, really come to a crawl. I mean, they had that nice boost. Yeah, it's a really big slowdown. So that's why most of the semiconductor stocks, plus the whole chip supply thing, plus the whole China, are they not going to invade Taiwan, which makes like 90% of the world's semiconductors, which is why the United States did this crazy thing, investing billions of dollars and giving money, literally handing money to companies like
Chips
Intel.
Act.
Yeah, and the Chips Act to build the foundries here. Even Taiwan Semiconductors building in Arizona, and I think 2 plants in Arizona. Yeah. But yeah, they want to turn the United States into the world semiconductor factory, because a lot of the world is seeing like, can't rely on China. I think they're going to start rotting from the top down with Xi Jinping being elected to the unprecedented third fifth-year term. So he's just going to become a dictator, I think. So that makes China almost uninvestable, and it's just a risk that I think it's going to take time. But anyway, long-winded way of saying that Intel said Q3 and Q4 should be, or Q2 and Q3 should be their worst quarters, and then Q4 right around the holidays they should start picking back up again. We'll see. I think it's going to take 2 to 3 years to get a really good flavor of if Pat Gelsinger is doing a good turnaround job, but they got a ways to go, man. So they're definitely a story stock right now, in my opinion, because they have a story that they're going to turn around, which they may not. So it's definitely a little bit riskier than like an AMD, which has been eating their lunch for a few years now. So
it has, and they took a massive hit as well. Now, I would say this though with Intel, one of the reasons why I also kind of lost hope in it, because I was really relying on the CHIPS Act, which was initially proposed during the Trump administration. When I was looking through it, it was for American companies only. That was the thing. It needed to be American companies so we could build American chips here. But then once Biden got in and they revamped the CHIPS Act, which is the one that got passed, they opened it up to foreign countries as well. And that's why TSM got in. And I was like, oh, man, now there's going to be competition with Intel. So at first I was like, Intel's going to be the leader here in America. And now they got TSM, and I was like, it might not be what I was hoping it would be. But then, drop happened too. So I was just like, I'm cool. I still like Intel though. Like you said, the story is really good. I just have to see the financials take a different direction for me to start investing back into it. AT&T was just, AT&T was always a dividend king for a lot of people. That's the reason I was like, okay, because I don't actually like AT&T as a stock. I prefer T-Mobile, but T-Mobile doesn't have a dividend. So out of all the telecommunication stocks for cell phones, T-Mobile is the one I like the most. But,
T-Mobile's been cleaning AT&T and Verizon's clock. I mean, they have just crushed them. If you look at a total return, even, mind you, total return is dividends reinvested, any special dividends, anything. Yeah, it's just crazy that AT&T and Verizon are down here, and T-Mobile is way up there. I mean, they have just creamed them as far as stock price goes. So T-Mobile, and then that's a problem with guys like me in my community. I'll tend to turn a blind eye towards the non-paying dividend companies, and I shouldn't do that. But I'm looking for that cash flow, and it's just it's something that's common with a lot of us in the niche, I guess, is poo-pooing the non-dividend payers.
It is definitely a niche, but it makes sense because it's a niche that's kind of smart, because regardless, I know it, because I've seen the argument before with dividend investors, right? Where it's like, oh, it's great that you get 4% a year on dividend, but the stock went down 10% and you're at a loss. Yep. So, that I've heard those arguments, and I get that. But again, a lot of you got dividend investors. You guys are planning on holding 20 years down the line. So things will change. And if you do the couple that with cover calls like you're doing, or cash secure puts, like you're making additional income right there. And I actually like your style. Like I started thinking, like, what are the best ways to invest or trade? And I honestly would say is find companies that give you a dividend that are profitable and start doing cash secure puts on them. Or, I'm sorry, not cash secure. Yeah, cash cover calls. There you go. Keep going back and forth. Cover calls on them, or do cash secure puts on stocks that you want to buy down the line. That to me, I feel like is the easiest and probably the best way forward. Yeah, the profits are minimal, but it's a compound effect, like we were talking about, and you build it up. After the turtle wins the long race, right? In the end of the day,
man, but it can be hard because it's a lot harder, just like you said, to sell a cash secured put on Apple when they're 100. Not many people have almost $15,000 just laying around to do a cash secured put. And then it's while that money's waiting to do the put. So I look at it as if I would have owned that stock, am I getting the commensurate amount of dividends at least? So yeah, even though I didn't get those shares of Starbucks, I at least got dividends for like a year worth. Just in a matter of 2 weeks, I got all of the equivalent of their dividends paid, which is like $250. So it would have been like $252. If you held 100 shares for a year, you'd get $252. I made that on Starbucks in a couple weeks because I sold a couple cash secured puts right at 82. I did an 82 and an 84. It was like, I don't know, 114, and then one that was like 134, something like that, which I don't think adds up to 252, but it's close. It's
Mhm.
pretty,
Yeah.
it's pretty close. And
No.
but then that's the thing. So I have that, theoretically, I had that $8,200 just sitting there, but now Starbucks is at 98. So it's
Yeah.
again, it's a give and take, and there's definitely a risk to everything. But to wrap that thought up, with dividend stocks, I love it because I don't have to sell. And at some point, if you need cash, like if you own Tesla, well, you're going to have to sell Tesla because it doesn't pay you just sitting there, So I would hate to sell some of these companies that I own, which is why I love dividend stocks, because hopefully I'm never going to have to sell PepsiCo.
Which ones are your biggest holdings in your portfolio currently?
Yeah, PepsiCo's probably the biggest one. Now I have our 401k, and that's something
Mhm.
I don't share. I keep that private, but I started all the stuff I do share, like on dapperdividends.com, is stuff I started in 2020, investing in it just so I could share and share my journey and what I'm doing with that. But yeah, man, pretty much PepsiCo is a big one, and I don't if we have time to share it, I could share the screen and show all of them. But yeah, PepsiCo is the biggest. Johnson and Johnson's up there. Lockheed Martin, just because I have 10 shares of that, and it's a $480 stock, I
Yeah,
guess.
that was expensive. Yeah,
Yeah. But and it's funny. See, that's a whole nother thing when you say expensive. But I was buying it when it was at 330s, 340s, because it was pretty much really cheap in my opinion. But a lot of people, when they start, they just see the dollar amount, and
yeah,
there's a thought that says there are way more stocks under $10 that are incredibly overvalued than there are stocks that are undervalued at over 100. So it just goes like, price is not all like Berkshire, right? I mean,
I got that one. I
Warren's,
love that. Love that stock.
yeah, he's never split it. They don't issue shares. They buy back shares constantly. So they're currently reducing the amount of shares that are available for people to buy. Therefore, the earnings that keep getting spread out over those shares that are still out there and available, which is why it's so much money. I mean, 300, the A shares, which is the voting shares, is like, I don't even know,
Oh,
$380,000 or something a share.
yeah, it's basically a cost of a house for one share.
Yeah,
So
and then they did, they released the B shares, which are non-voting rights. So if you own the B, you don't have any say so in the company, but you can still, ride Warren's coattails, I guess, with what they're investing in.
mhm. Yeah, that's the one I got in my play account because I also share a portfolio that is basically my play money portfolio. It was the one that I kind of consolidated. I have a Roth as well, which I don't share, and I also have another Roth that my financial advisor takes care of. But I
Okay.
want to get into. I may actually open up another separate run for me personally and kind of do the dividend stuff like you and Ryan been doing because I think it's very smart and I think it's safe. And I'm not going to keep pouring a bunch of money into my play account. I've told myself moving forward every year only $3,000 max, and that's it. That's all I'm going to put in, and nothing else. I'm going to continue to put most of my money in my Roth and try to do the whole dividend thing and kind of do what you guys are doing. If you had to choose like only two stocks that you would invest in moving forward, which ones would it be?
Well, I'm gonna again go with Warren. If he has a saying, if the stock market were to close for 10 years, what would you feel comfortable holding? Meaning, if you couldn't sell it. And for me, right away, it would be. Of course, I could probably make a case for 100 of them, but just off the top of my head, had to make a choice, it would be Procter and Gamble and PepsiCo, just because they're just, everybody's going to be, everybody watching, go in your bathroom and see how many Procter and Gamble products you have. It's probably going to be at least 3 to 4. You'll find it surprising. I know I do too. Like I use Pantene sometimes. because my daughters, I like the spray and conditioner. That's Procter and Gamble. Crest is Procter and Gamble. I think Old Spice is, my deodorant is Procter and Gamble. My aftershave gel is Gillette. That's Procter and Gamble. And I'm checking my wife to see if she's got a Procter and Gamble tag or tattoo on her. So they're just everywhere, man. It's crazy. So Procter and Gamble, and then PepsiCo. PepsiCo is just, dude, they have products again everywhere.
They do.
Everybody's
They
I mean,
do.
and they're branching out into healthier stuff. Everybody's worried about the non-sugar thing. Well, Ramon LaGuardia, the CEO, 2 earnings calls ago said non-sugar is king. That's what they're investing in. That's what they want to move toward more because it's, dude, all these companies are living, breathing entities. And this is what's so fun about investing is that we get to watch what they're doing real time, shifting consumer demands and how they're responding to those. And PepsiCo is doing just that with a lot of the non-sugar products that they offer. But the fun fact about PepsiCo is that 55% of their net revenue mix from 2021 was from foods. Obviously 45% was from beverages. So PepsiCo makes more money from food than they do from beverages, which is why I like them over Coca-Cola because Coca-Cola doesn't really have that food exposure. So yeah, those would be the two. I told you, I'll give a long-winded answer for, everything.
No, I'm glad you actually mentioned because I was going to ask you, like, why not Coca-Cola, but you said PepsiCo, you just explained the reason why. So that definitely works. Give me 1 second. I'm sorry. What's up, Gary? I'm in it. Hold on. We took the time. Can you get out your room? What did your mom say? Why would you ask your mom? I'm shooting a podcast. I'm not the one who sent you to your room. That was your mom. That wasn't me. That was your mom. Go ask. All right, bye. Sorry, man.
I missed that, dude. No, sorry. Don't apologize. I missed that, dude. I missed that. Like I said, I have a 15 and 14-year-old now. I have to compete with their phone for their attention and affection.
Yeah, jeez.
Told them I need to build an app where I can be on their phone so I can engage with them,
Yeah, pay attention to me. All right, sorry. So let's pick up. Yeah, man. So I would say, like, well, for one, I didn't know Pepsi was involved in food. What food companies do they own?
Frito-Lay, baby. Frito-Lay. Cheetos, Fritos, Doritos. You got your Cool Ranch. They own Sun Chips.
Really? Okay. That shows you. I never looked into Pepsi. Wow.
Oh, dude. They own Quaker Oats, too. So they have Quaker Oats North America, which I love Quaker Oats, all the Quaker Oat brands. They used to have Aunt Jemima, and I say used to because they still do, which is now Pearl Milling Company, which, dude, that bothered me. I'm a white guy, but it just – and I know
you're about to get canceled. No, I'm just kidding.
Yeah, when I was a kid, I remember looking at her and I was like, I don't know, it just never seemed right. And then do you remember they changed Aunt Jemima? Then she was like a businesswoman, She had the pearl earrings, which Pearl Milling Company. But yeah, she I don't know, and then I guess I don't remember what happened, but they had to change it. So
I could tell you this, man, and this is just coming from my conspiracy theory mindset because I did not like that they got rid of Uncle Ben and Aunt Jemima. Like those were crucial faces that we grew up with, right? But they try to say, it's rooted in racism and blah blah. But I'm like, I didn't see that anymore. I think that her image has changed so much that I didn't see that. And in fact, I would say it was racist taking them off the box. In fact, because I'm like, you had two prominent Black figures, characters that were well known within our food industry, and you got rid of them.
And it's funny now that you say that. Yeah, when I was a kid, I guess, like with Aunt Jemima, I don't remember. Didn't she have like a rag? No, not the do. I don't know what to call it. Handkerchief or something. I think she had, but it felt like somebody that I could connect with more because I never grew up around business people. I grew up around hardworking blue collar people.
Yeah.
But I don't know. Anyway, so PepsiCo, dude, they make more money from food, or they bring in more money from food than they do from beverages, and they're a ginormous worldwide empire. And I love them.
I only looked into Coca-Cola, and I know that Coca-Cola owns a lot of the beverage sector, so I didn't ever look into Pepsi, but I'm going to now since you mentioned it. But if I had only picked two stocks, Procter & Gamble is one of them, like you said. I don't have any shares in Procter & Gamble yet. I'm actually waiting for it to go down to around 110. It just hasn't done that yet. So, and I'm kind of worried, like, am I missing out? Because it's not really taking a massive hit like I was expecting it to. But Procter & Gamble and Berkshire, those are the two that I would by far invest into. I know everyone's like, well, Apple, Microsoft. I'm like, I'd rather do Berkshire because, why not invest in the guy who is been doing this for nearly 80 years and has been successful at it It's basically an ETF. Let's just be real. Berkshire is basically an ETF.
Well, you own Apple. If you own Berkshire, you own Apple.
Exactly. And I think majority of his fund is Apple. If I haven't looked at it recently, but I think it is still.
It's grown. It's grown to their number one position.
So you still own Apple. And then Procter & Gamble, like you said, if you look anywhere in your bathroom, it's just everywhere. Those were the two that I would, if I could start all over again, those would be the two I would consistently invest into from the beginning. But I just started investing into Berkshire in June when it went to its 52-week low. That's when I started buying some shares.
I should have. I think I might. I actually, it's funny. I'm glad I'm talking to you about that because I've thought about it. I've been, Warren Buffett has been such a pivotal figure. I mean, like I said, I'm reading Buffett, The Making of an American Capitalist, which is really interesting, dude. And it's funny. He left the Republican Party because he didn't like their civil rights stance. I mean, I had no idea that him and his wife were such, like in the 1960s, that they were such a pivotal parts of like equality and stuff. Like you don't hear that talked about. I mean,
oh yeah, I didn't hear.
It's just wild. I'm like, why don't we hear about this more? But yeah, just really, really interesting. He's given like 90-something% of his money away to charity when he dies. But yeah, anyway, I think I'm going to buy a share of the B shares. I don't know why I haven't yet, but you're right. I did watch it. It's on my watch list when it went under 300. I was like, interesting.
Yeah.
And then it was in like the 260s or something, and I still didn't pick it up,
Yeah. And my average is, that's when I started buying was 260 something. I think my average is like 276 right now. I don't have that many shares. I only have maybe 5 shares right now. But yeah. I plan on constantly investing.
That settles it. I'm buying a share on Monday.
There you go. Let me know. Definitely text me and say, "Hey, man, I bought." So,
I will.
But I'm actually, I'm pretty good with technicals. Like, I'm not gonna lie when it comes to, like you said, the technicals, the levels and stuff. So I've mostly focused on supply and demand, and my price points have been hitting pretty good this entire bear market. So I'm relatively happy because people said I was crazy when Tesla was at 300. I caught 205, and they're like, "Yo, you're smoking crack. You don't know nothing. You're really a dummy. You're true to your name." Went to 205. Then when we went to 205, I said, if it doesn't hold 200, 188 is going to be the next demand zone. And it got to 188, and that's where I bought my very first Tesla share, just one. And then, it went below that, and then it bounced back. So I think it's above it now. But I do think Tesla's going to go down to 150, 165, 150 in the next 6 months. My mentor thinks it's going to end up going eventually to $65, not split. So,
yeah, dude, there's a lot of people that have values on it sub $10 just because of the way that the business is structured and run. Yeah. And I know there's a lot of financial shenanigans and accounting gimmickry that they do. I mean, I don't invest in it. I did have 3 shares around $200 pre the first split. And of course, I sold them at $220. So I think I made like 60 some dollars. And the reason I did it was because there was a financial podcast that I listened to, a respectable name. I don't want to say who it was, but he did analysis on it and said, I think this company is going to go bankrupt in a year. And he said, I feel bad for all the people that don't know this. And he had very legitimate arguments going through the financial statements and telling a very reason why they're going to go bankrupt. And yeah, so I ended up being like, that's it. I'm going to get out. I'm like, look how smart I am. Like, all these suckers are staying in and they're going to ride it to zero. And then we know what happened. I watched it go up and split. And I go up and split again. And I did the math and it kind of made me a little sick to my stomach if I would have just held. But we live and we learn.
Tesla is a weird one. Tesla's definitely a weird one. And, it's so volatile and it, too many risks in my personal opinion to have like majority of portfolio in there because I'm just not a strong believer like that when it comes to Tesla. But yeah, I mean, move on from like just the stock stuff before I let you go. I wanted to talk to you about, because I mean, you're great. I love we need to do this again because you and we have so much to talk about and I just want to keep talking, but I also know that people tune out after a while. So
I'm free,
but
yeah.
I want to talk about your YouTube channel and what made you decide to, you know what, I'm going to start a dividend specific channel and start sharing my journey. Why?
Yeah, so watching Ian Lopik, he was kind of I don't know how many people he has started or got them to create podcasts, YouTube channels, websites. I mean, he's kind of one of the OG dividend investors. So watching him talk about it, and then I just thought, like, I invested dividend stocks for a year now, or maybe a year and a half. I could do this. I could talk about my stuff. And I ended up going way off the rails really quick. So I wanted to do it a little bit differently. And I originally called it Stashing Worthy Acorns. So I had this thing, I put $50 into stash, worthy bonds, and acorns. And over the course of 2 years, I wanted to see which one was the winner, which one grew bigger. And in stash, I only invested into Apple, Procter and Gamble, and Johnson and Johnson. And then I was doing, I think, $5 a week, so $20 a month into each of those. And then, I don't know, Worthy Bonds stopped issuing shares, so I couldn't buy more bonds, that is. And it just turned into, it just got stale and old. So then I was talking about anything that paid me a dividend. I mean, I was doing crypto stuff. I was doing, I did teens debit card. So my kids, we have a Capital One card for them. I did some stuff on that. And then I did almost anything finance, or, you know, I don't know. I did swing trading stuff. I was like, oh, people will be interested in this. But then I learned that, you know, I read some stuff. I worked with a group, video creators, Tim Schmoyer's group, and they were like, you know what, you need to focus on one specific thing. If you're trying to speak to everybody, you're speaking to nobody. And by trying to speak to everybody, it doesn't land on people. You know, you need to speak to specific individual people, because then it hits them and they're like, oh, this channel's for me. So I said, you know, I'm a dividend investor. And maybe like 6 months ago, I said, okay, that's it. No more crypto, no more, only dividend stuff. That's it. That's what my channel is about. So I've refocused it. And, you know, I think that hurt some of the growth. But yeah, so just sharing my experience, trying to put out my analysis, my opinion on things, and learning to be a better business analyst. I'm taking 2 different I'm reading a book, and I'm taking a financial course on just with an English guy, Ted Wayman. He used to work for JP Morgan, and he's just a certified accountant. Like that's his thing. He does accounting. Like he knows these things. So I'm just learning to be a better analyst and come up with my own opinions. And like you said, people can be so susceptible. I did stuff in the past like selling Tesla because somebody was like, hey, look at this. But it, you know, the beautiful thing, it just goes to show that nobody knows what's going to happen. That's what makes investing and life so freaking interesting, because nobody has a clue. Everyone has an opinion. Some people's opinions will be right, but overall, nobody has a clue what's going to happen. And to answer your question, I just wanted to share my own opinion, and I thought it would be cool to get paid a few bucks too in just talking about something that I love doing and sharing with people. But I think the realization that I've had is that I don't want to be famous. I just want to be known as a dividend growth investor.
And you definitely are. What was your strategy on learning financials? Like, when did you start learning and deep diving into that? Is there any like books that you would recommend or YouTubers that you would recommend where you learn from? Because you guys are really good. You and Ryan, you guys are really good. We're going over the financials. I noticed you guys use Seeking Alpha, by the way, which is an awesome platform. I'm waiting for the 58% discount again so I could buy. But yeah, can you explain that? Like, where did you learn majority of your financial analysis?
Everywhere. Everywhere. So I made the joke, I'm a YouTube certified financial analyst. You know, it's like I should put that on a shirt. Years ago, I saw a car. It was a real piece of garbage car, and they had a big sticker on the back. It said YouTube certified mechanic. I was like, oh, I'll feel good taking my car to this guy, you know? So yeah, just YouTube, but books, Warren Buffett and the Interpretation of Financial Statements. There's a book from The Economist, how to analyze. Oh, dude, there it is.
I got to go through some books with you. Yeah, that's a great book.
Yeah, man, that's one of them. The Economist, Bob Vause is the author, how to analyze businesses. There's just been I'd get books from the library. I mean, I would just wherever I can, podcasts. But like this course, this is a little bit of an in-depth like dive, the one that I'm taking, and I'm just enjoying it. So it's been a process of, man, just everywhere, little by little, you know, the aggregate return of marginal gains, they say, just trying to get 1% better every day, every week, every month. And that adds up, you know?
So as for you, like with your YouTube, do you just basically you work your 9 to 5 job, right? And then you come home and you end up shooting videos and then putting it out, and then also like looking what the hot topic is, or like what's going on in dividend world and what I'm going to do. Like, how does that work? Do you have a routine set up?
Yeah, I should have a better one set up, but 9 to 5 is funny because most mornings I'm out of the house by 6:45, 7 a.m., and then I'm usually home about 5 ish. So I'm out a lot, and I'm in a work truck, so I'm driving around to different jobs. So I listen to a lot of audiobooks. I easily read 100 books a year, just from Hoopla and Libby. Those are 2 free apps, and if you're in the United States and you have a library card, you can listen. You can sign up with those apps. You plug in your library card, dude. Thousands of audiobooks. You don't need an Audible subscription. It can be hit and miss on some things, availability. But yeah, and then when I get home, I just if something hot happens or if there's something like newsworthy, then I might do a video on it. I'm waiting. So on 13Fs come out on November 15th. Every 3 months, it's just the filings from the SEC requires fund managers. I think it's over $100 million in assets under management. They have to file these statements, these 13F filings, these statements. And it's just a snapshot of what they held on the day they submitted it. And it's really cool because that's when you see all these videos. So mark my words, just after next week. So what's today, the 12th? So a few days, November 15th, you're going to start seeing a slew of what Warren Buffett bought, what Warren Buffett sold, Warren Buffett portfolio activity gets a ton of views. So you're going to see all these things dropping right after November 15th, including me. I'm going to do one. So, it's funny. You feel the pressure to be like, I got to be first. I'm telling my wife, I'm like, I should take the day off of work as soon as we get it. Like I can hurry up and make a video, but I'll get one out. Yeah, so that's kind of the structure. I have a whiteboard over here with broken down into days because I have a podcast that I do every week. I have a weekly newsletter. I have the website that I maintain. Then I do a live stream every Sunday. I do sometimes 2 videos a week for the YouTube channel. And that's obviously in addition to my work and, fatherly duties and handyman duties around the house that we own. And relaxing, having fun with my wife, man. We every night I make a point. We watch our TV shows, something from 9:15 until 10 o'clock. I have a couple drinks. My wife will too, and we just watch, or 10:15. We'll watch an hour of TV at the end of each day, and that's kind of our time to hang out and decompress together, so to speak. But that's kind of what it looks like. So it's quasi structured.
Quasi. Yeah, no, for sure. So let me put up your screen right here so people can follow you. Everyone, listen, if you are interested in dividend investing, you need to follow this guy. I'm telling you guys will enjoy his channel. He goes over his portfolio like we talked about earlier. He incorporates dividend investing with cover calls. And you guys have been DMing me, asking me to drop something for, cover calls. Well, I'm going to do that. But still, if you want to follow someone who's also doing it, here we go. So how do you say your last name? Knopf?
Dude,
that's how you say it in German. That's how you say it in German.
You probably say it better than I do. I just say Knopf. I got that Chicago accent. I can say Knopf.
Yeah, because Knopf.
So if you remember, we'll go back to the beginning. I know it was a long time ago, but my stepfather, I took his name, and it's like a bad tattoo now. I haven't spoken to the guy in almost 20 years. I don't even know what he's doing.
That long. Okay. Oh,
yeah, so I have his last name. My birth name was Malczewski, so I'm a Polak, and I'm Czech and Polish is my heritage, and I think a little bit of German because my grandmother's grandmother's maiden name was Mader, so that's obviously German. So there's some Germanic blood flowing around in me, but predominantly I'm Czech and Polish, and I got a German last name. So how do you say that again? Knopf.
Knopf.
Yeah.
Yeah,
Dude, that's how I'm
no,
gonna say. Well, I'm not
it's,
gonna say.
you're like, I don't
like
even want the name. I don't even want it. So it's like,
I don't, and I've thought about like it's too late. I can't revert now. I went through the military. I've got driver's records. It would be a big pain in the butt. So my wife, I told her I forbade her from taking my last name when we got married. So I was like, no, you're keeping your blood name. We had 2 girls. We decided to give them my last name. So I assume that they both will marry, and I'm gonna absolutely tell
encourage
them.
to
I'm gonna
change.
say command them, but I'm gonna tell them like you're changing your last name. So
Yeah.
but,
Well, okay.
so
Well, they can
that's
find you here, and
yeah.
what are all? So name all the other places they can find you. You said you also have a podcast. So what's the?
Oh, dude. So it's funny as before I jumped on, I'm finishing my landing page. So it's gonna be my I wrote a book called Brief Thoughts on Life, Love, and Investing. So I'm giving that away for free. But I also have the newsletter. If you go to dapperdividends.com, some of it's there. And I'm going to put a link to this on there as well.
Okay.
But yeah, I'm building a nice little landing page that's going to have everything clickable. I just don't have it done yet. But yeah, dapperdividends.com has links to most of the stuff. So pretty easy to remember.
Well, there you go, everybody. Make sure you check him out. Also, let's play this game real quick. Obviously, you got this book, right?
Yeah.
You got this one?
I don't have that.
You got this one?
Nice. I've read it. I don't own it, but I've read it a few times.
Everyone has to own this book, okay? Everyone. That's like a must for any like investor or trader. Everyone needs to own this book. $6.
Oh, that was one of the first books I read, dude. Yeah.
Yeah, same. It really is. Come to find out, I heard the whole story is BS.
Oh yeah, he made it up. Yeah, but it doesn't matter.
I know it's still a great story. Yeah.
From what I understand, it's made up. Dude. I mean, just goes to show you what you can do making stuff up. I guess change people's lives. It's the principles that matter. I think.
Yeah, he's been riding that gravy train for like over 20, 30 years. So
everything now is a funnel from that. It's just that's the funnel into the world of Robert Kiyosaki. And if you look on his YouTube channel, oh dude, the world's ending, China's taking over the world, Bitcoin, you gotta own Bitcoin because if you don't own Bitcoin, then you won't be able to eat in a couple years. It's just, he's out there.
Yeah. It's weird. And that's and it's a little sad because like you see Robert Kiyosaki, I can't even say his name right. But the fact that he has gone down this weird rabbit hole, sometimes I feel like it takes away from his credibility because he was very well respected on the beginning stages, and now it's just like he seems like a grifter. Like, I just want to sell you more stuff and fear and buy more stuff. And it's kind of sad because like, did you not make enough money off that book? Like, what happened? Like, why are you doing this? So, because this is such an amazing book. So
I don't know. I don't know. I'll ask him someday if I interview him.
Yeah, shoot, if I ever, well, I don't know. I tend to burn bridges sometimes when I give my opinions on certain people, so it happens. But listen, Russ, thank you so much for coming on my channel. I really appreciate it. We got to do this again because I feel like I have so much more to talk to you about. And we're like, our deal was what, like 45 minutes an hour? We're an hour and 42 minutes. Hey, still pretty good. Didn't feel like it. But hopefully everyone enjoyed this conversation.
If anybody's still watching now, you got to leave some kind of special emoji in the comments because you're a trooper, and I really do appreciate it.
Very good. That's how we know. An emoji in the comments, which shows that they actually watched this fully, which is amazing. So
there you go.
And again, well, thank you once again, Russ. Until next time, y'all.